Newcore Gold is up at 2/3 in the past month after an updated preliminary economic assessment on its Oreninc gold project in Ghana. Luke Alexander is president and CEO. Luke, welcome back to Kitco.
Yeah, thanks a lot for having me, Michael.
I'm going to talk about the stock move in a minute, but maybe first, just introduce it again to the Oreninc project.
Yeah, so Newcore Gold, we've got the Oreninc project in Ghana. It's a district-scale exploration project that's fundamentally underpinned by very robust economics. We did put out that updated PEA at the end of last week. It outlined very strong, robust economics for the project at an $1,850 gold price and after-tax $371 million US NPV. So we've started to see some of that get reflected into the stock. But my view is we've got a big re-rating opportunity coming as the market starts to recognize the value of our project. So district scale, fundamentally underpinned by a very strong economic study, and then a management team who's truly aligned with shareholders. So we own, between management and board, 22% of the companies. That's money we've invested alongside investors. So we're truly aligned from that perspective. So that's high level Newcore Gold.
The region has been challenged right now with some of the coups and some political instability right now. How is it where you're working right now?
So I'd say some parts of Africa have been challenged. Where we are specifically in Ghana, it's been a great jurisdiction to operate in. It's got a very supportive government to move projects forward. It's also, from a security perspective, very safe. But what we often point to is the fact that you've got 3 of the top 10 largest gold producers on the planet there with significant operations. Newmont, being the largest gold producer on the planet, they're investing an additional $1 billion into Ghana. That will take their Ahafo project, which sits along the Sefwi-Bibiani belt to the north of us, to their second largest producing asset globally after the Nevada Gold Complex. So again, I can tell you it's a great place, it's wonderful, but when you've got the biggest company on the planet investing that kind of capital, I think it speaks for itself. So as a company, Newcore, we're very fortunate that we amassed such a large land package that when we did, and obviously now we're focused on unlocking the value from that project.
How's the infrastructure? Have you got water there?
We've got access to water. We've also importantly got a paved road that cuts through the middle of our project with a power line running beside it. So that's one of the things that, again, really helps the NPV of this project, is the fact that it's a low capex project and we're able to leverage all of that infrastructure that we've got on our project. We've got the town of Oreninc, which sits about 15 kilometers away from where the processing plant will be. So it's far enough away that there's no issues when it comes time to building it. But we've got a university campus there. We've got hospitals. We've got high school. So all of our employees can live in Oreninc and easily commute to the project. So that obviously helps in terms of the overall capital to build this project, which is about $106 million of initial upfront capital.
Can you talk about your social license and ability to operate there?
Yeah, so we've been operating in and around Oreninc and had the Oreninc project for a number of years. Our country manager, Dan Wilson, he's worked in the Oreninc area for the past dozen years. So we've got very good relationships with all of the local stakeholders. We offer the locals jobs first where we can. We also recently, at the end of 2023, completed a social and environmental baseline study across our project, which is one of the key things that's required for applying for a mining lease. And we had very good feedback from that study. So we're really well positioned to ultimately push this project forward towards a production and ultimately put it into production. And part of that is obviously the local communities and working closely with them.
Are you financed?
So we've got right now, if you look at the cash balance at the end of 2023, we had $3.7 million in the bank. If you look at our previous cash balance from the quarter prior to that, it was about $4.9 million. So we burn about $1 million a quarter. Again, as 22% owners of the business, we want to see as much money as possible going into the ground, as well as we've got about 17 million warrants that are in the money. strike price of 20 cents a share. We're trading at about 32 cents Canadian today. Those warrants expire at the end of the June. We've already started seeing some of our major institutional investors exercising those warrants. So we'll get an additional about $3.3 million coming in from that. So you take the 3.7, the 3.3, we would be at roughly $7 million, which gives us lots of runway to push the company forward.
Luke, I want to step back and then just talk about where the mining industry is right now. You have a background in finance before you took over the reins at Newcore. We were talking before, gold hitting several all-time highs right now. Copper's been making a nice run. I think last I checked, about 20% up year to date. And then we've seen all of this great M&A that's been happening right now. You were talking, though, that really a catalyst that we're going to have to see is we're going to have to see it in Q2. What do you mean by Q2 and what has to happen?
Yeah, so I think one of the things we always obviously saw is in Q1 is we saw gold start to move and have a real appreciation. That move started, into Q1. So the real impact of $2,300, $2,400 gold wasn't reflected in the Q1 numbers. As we, push through Q2 and assuming we stay in this same range, that impact of this higher gold price will really start to flow through a number of the majors, financials and, fall to the bottom line. So that free cash flow generation from these higher gold prices will have a real positive impact on the producing companies. And inevitably, when you look at the generalist investor, which in my view is what really, drives the outperformance of gold equities, is when that generalist investor starts to come into the sector. And when they look at, gold companies, they're looking at them often the same way they'll look at consumer products companies or banks. They look at EBITDA, they look at free cash flow, they look at price earnings ratios. So once we start to see that impact of a positive gold price really start to flow through, all of those companies will start to look very attractive using those generalist metrics, which then should hopefully bring those generalist investors back into the gold equities, which can have a real positive impact on the overall sector. The other thing I think is important just to touch on is inflation. Obviously, the sector's seen a lot of inflation over the last few years, and every sector globally has. All of our, households have seen inflation. But, we've started to already see with some of the forecasts that, companies are talking about flatlining of expenses, going down in some cases. What that'll lead to is margin expansion. We've been seeing margin compression over the last number of years. So $2,400 gold, if you've got an $1,800 all-in sustaining cost, is the same as having an $1,800 gold price and a $1,200 all-in sustaining cost. You've got $600 of margin on both of that. So as we start to see that margin expanding with an ever-increasing gold price, that again is what should bring a lot of investors back to the sector.
You touched on it before, and that was talking about M&A. I was interested more in what you're seeing specifically regarding mergers and acquisitions in Africa. Of course, we had the big headline that was maybe about 2 weeks ago, where we saw potentially floating a $30 billion plus if BHP is able to take out Anglo, which is providing some momentum into the space.
Well, we often joke that BHP Anglo deal was the second biggest news last week after Newcore's announcement of our PEA. So, we were kind of hitting the headlines in the same way there.
I think you took a better leg up. So maybe that's the reason why.
Yeah. There we go. So,
yeah.
But yeah, kidding aside, I mean, Africa has been, without a doubt, a go-to place for companies looking to buy projects and assets. And, we've got Osino, who recently had a bid from Dundee Precious Metals, which then got outbid by Yintai. So a competitive bidding situation for that project in Namibia. You've got OreCorp, similar situation, not one bidder, but multiple bidders. Silvercorp was in there. Perseus came over the top. We've got Tieto, who just announced that they've had an increase on the hostile bid for that project. So, I think it highlights that Africa is a go-to jurisdiction. really well endowed from a mineral perspective, but then also the ability to get projects built and put into production is something that's very, very attractive for companies. Specifically in Ghana, we saw the announcement between Goldfields and Anglos on the merging of that asset. We've seen the Cardinal project get taken out and now is being built. So there's been a lot of activity in Ghana as well, and there's a scarcity of projects, which is one of the benefits for companies like us at Newcore.
Financing is really the lifeblood for the juniors right now. So we saw the Rio 2 have its $23 million financing. What I've heard, though, from people talking to Kai Hoffman is that still a very selective financing sector right now, financing environment right now.
Yeah, I mean, Rio 2, I think they went out for $10 million and it got upsized to $23 million. I actually hope it remains a selective financing market, and it's really just the quality projects that get financed, the ones that stand out, from the hundreds of projects that are out there. Because inevitably, because it is a cyclical business, and as the market heats up and as people get exuberant, inevitably PowerPoint presentations get dusted off and every project out there gets financed. Inevitably, when things correct or normalize, those projects that don't have quality assets, that don't have quality teams, that aren't at a stage that should be getting financed, inevitably, the stock prices lag or collapse and shareholders end up, suffering. And then, it becomes more challenging for the overall sector to perform, through the cycle. So I hope it remains selective, and that's probably counterintuitive to what a lot of people say. But because we've got a high quality asset that we've been continuing to push along and advance over the last few years, despite it being a tough environment, we've got 45% institutional ownership, deep-pocketed, long-term focused investors who recognize the quality of this project and invest through the peaks and troughs. I hope it remains a selective market, and I hope, the money goes into the market and buys the stock so that we see the performance, as opposed to focusing on financing companies and topping up treasuries. Investors can always go buy in the market, and that's where you really make your share gains and appreciation, was when stocks go up. So slightly counterintuitive to probably what a lot of people talk about, but because we have such a quality asset that we've been de-risking and moving through the tough times, we hope that continues.
Luke, lastly, the next 12 months, you've got your updated PEA. What do you do next?
So we put out the updated PEA last week. Obviously, it outlined very positive and robust economics, $371 million after-tax NPV at a spot gold price, call it $2,350. We're looking at an after-tax NPV of $630, after-tax IRR of 92%. So these are very attractive metrics for a project. We'll be out there talking about it over the next few weeks, meeting with our major investors, meeting with the board, and coming up with a plan to continue to de-risk the project, continue to explore at our Oreninc project, both from a delineation perspective as well as a grassroots exploration. And in the meantime, we continue to do a huge amount of met work, so we'll get those results out. We're doing hydrological geotech work. We're doing condemnation drilling across where the heap leach pad would go. So all of that stuff is critical to get it into production, to move it to a construction decision. May not be as exciting for the market, but it's crucial work that needs to get done that we'll continue to focus on.
Luke, thanks for speaking with Kitco.
Yeah, thanks a lot for having me, Michael.
My name is Michael McRae here with Kitco Mining.